Welcome back to Explain the Charts, everyone. Today, August 5th, 2025, we're breaking down GBPUSD, a pair that's seen some significant action and is poised for potential volatility based on recent news and technical indicators. First, let's look at the broader economic landscape influencing this pair. Recent headlines suggest a heightened likelihood of a September Federal Reserve rate decrease, which inherently puts downward pressure on the US dollar. This sentiment is further supported by U.S. services flash warning signals and global stocks rising on the prospect of lower interest rates, indicating a potential weakening of the greenback. On the other side, the British pound, sterling, has shown resilience, rising recently and being described by Bank of America as having its bearish stance overplayed. Ebury even anticipates room for a mild recovery for sterling, calling it oversold. However, we must also consider President Trump's recent vows to ramp up tariffs on India and impose new tariffs on pharmaceutical and semiconductor industries, which could introduce global trade tensions and shift safe haven flows. Crucially, a Bank of England rate decision is coming up on Thursday, making the next few days critical for the pound. Now, let's transition to the daily chart to see how these fundamental factors translate into price action. Looking at the full range of data from March 2024 to August 2025, GBPUSD has experienced a general upward trend, but it's been punctuated by notable pullbacks. We can identify a significant low around 1.22 in January 2025, from which the pair staged a strong recovery, peaking around 1.35 to 1.37 in late May and early June 2025. This long-term perspective shows a bullish bias, but with clear zones of resistance that the price has struggled to consistently break above. Currently, GBPUSD is trading around the 1.32 to 1.33 zone, having pulled back from its earlier highs. This level has historically acted as both support and resistance, making it a critical area to watch. Zooming into the 1-hour chart, we can examine the recent movements more closely, specifically focusing on the period from mid-July 2025. After trading near 1.34 in mid-July, the pair saw a significant decline, indicative of profit-taking or renewed dollar strength. However, following this dip, we've observed a period of consolidation, with the price attempting to stabilize and recover. The short-term trend has been quite volatile, marked by sharp movements up and down. This volatility is typical when major economic announcements, such as the upcoming BOE decision or Fed speculation, are on the horizon. Let's pinpoint a specific recent event on the 15-minute chart to analyze its immediate impact. On August 1, 2025, around 12:13 Universal Time Coordinated, we saw a rapid surge from approximately 1.314 to 1.328. This sharp move likely correlates with the news of weakening U.S. data and increased speculation about a Fed rate cut, which would make the dollar less attractive. This demonstrates how quickly sentiment can shift and create significant trading opportunities. After this spike, the price has generally consolidated around the 1.32 to 1.33 range, but the quick upward reversal from the 1.314 level suggests strong buying interest at lower price points. The 1.314 level could now act as a significant immediate support, while the high of the spike around 1.328 to 1.330 forms immediate resistance. This rapid price action emphasizes the importance of understanding the news catalysts and being prepared for swift market responses. For short-term traders, the current price hovering around 1.329 is crucial. Immediate support lies around 1.325 and then the 1.320 psychological level, with stronger support near the August 1st low of 1.314. A sustained break below 1.320 could signal further short-term weakness, potentially targeting 1.314 or even the 1.310 area. On the upside, immediate resistance is at 1.330, followed by 1.335 and the high of the recent bounce around 1.340. A clear break above 1.335 would suggest a stronger bullish continuation, with targets towards 1.345 and possibly the May-June highs near 1.35 to 1.36. For long-term traders, the 1.28 to 1.29 zone remains a key support area if the overall bullish trend is to continue, while the 1.36 to 1.37 zone represents strong overhead resistance. The current consolidation around 1.32 to 1.33 could be a precursor to either a break higher or a deeper correction. So, what are the reasons to be bullish or bearish for GBPUSD? Bullish sentiment is reinforced by the prospect of a dovish Fed, with potential rate cuts weakening the US dollar. The oversold status of sterling, as highlighted by analysts, also suggests inherent potential for recovery. If the upcoming Bank of England decision on Thursday is perceived as hawkish, or even neutral when market expects dovishness, the pound could see significant upside. A break above 1.335 and sustained trading above this level would be a strong bullish signal. However, reasons to be bearish include potential escalation of global trade tensions from Trump's tariff announcements, which could trigger safe haven flows into the US dollar. A more aggressive rate cut by the Fed than anticipated could also signal deeper economic woes in the US, leading to broader market risk-off sentiment. If GBPUSD breaks below 1.320, especially on strong volume, it could indicate a shift towards a bearish short-term trend. In recap, keep a close eye on the 1.320 support and 1.335 resistance levels. A breach of either with conviction will likely dictate the short-term direction. The probability of GBPUSD testing 1.345 in the short term is moderate, around 60%, especially if the Fed maintains a dovish stance or the BOE surprises with hawkish comments. Conversely, the likelihood of a dip back towards 1.314 is also present, around 40%, especially if US data improves or global risk aversion increases, strengthening the dollar. Beyond price levels, watch the volume accompanying any breakouts or breakdowns. Higher volume reinforces the validity of the move. Finally, the Bank of England decision on Thursday is the most significant upcoming event. Pay close attention to the language used by policymakers and any forward guidance on interest rates. That's all for today on Explain the Charts. Wishing you successful trading.